Welcome to the Property Investing Roadmap podcast.
I would say once the thought is in your head, we would like to invest in some property, have the conversation.
Make time and discipline your friend.
I'm your host, Damian Collins, here to help you navigate the twists and turns of property investing.
The true investors are the ones that ask the right questions, but then make a very quick decision, and they're the truly wealthy ones.
For real success, you need a real strategy.
Buckle up as we hit the road with expert tips, real life stories, and the 9 key steps to help you plan, build, and optimize your property portfolio.
No one's going to invest to make a loss. You're going to make profit.
Now, most property investors will invest a lot of time into the buying of a property, and that's so exciting. You're out there, you're looking on the internet, looking at properties, you're visiting home opens, doing all your research, and you're finding the property and negotiating. And obviously, even if you've got a great buyer's agent with you, you're still there for part of that journey and working alongside your buyer's agent. But managing your property well and engaging the right team to help you with this plays such a critical role in building a successful property portfolio. And that's one of the reasons why many people don't get past that one investment property, because they get sick of the headaches of property management. If you get the great team behind you, that'll be a lot easier, and we'll talk about that today. Now, joining me to explore the importance of effective property management is Amanda Kroczek. She's the Manager of Residential Property Management at Momentum Wealth. Amanda's got nearly 2 decades of experience in Perth's property management industry, both managing client portfolios and more recently leading our property management division over the past 11 years. So welcome, Amanda.
Thanks, Damien. Yeah, I'm certainly looking forward to it.
Amanda, now a lot of people think property management is a hard gig, and it is, but what's some of the favourite parts of your role?
I think some of the favourite parts would be assisting clients and tenants to actually find themselves a home and helping them through that journey, and then also for clients helping them secure the right tenant and maintaining their investment to a high standard and ensuring that they receive the best rent that they can.
And it's a bit of a balancing act, of course, because you're representing the property owner. At the same time, you want to get a tenant in, and there's certain legal obligations that the owner has to comply with. And how do you manage that, and how do your team manage that relationship when you've got sometimes competing interests? Yeah,
you're definitely the meat in the sandwich. It's important to remain diplomatic. Try not to get emotionally involved. At the end of the day, it all comes down to the act. We're governed by the Act. We're also engaged by the owner to act in their best interest. So while we still need to be reasonable and fair and empathetic to the tenant, we're also there to act on behalf of the owner and protect their best interests. So that's one of the main things to remember. Yeah, and it's tough when rents are going up and all those things. But ultimately, as you say, you've got to work for the best interests of the property owner who's paying you that money. So most people, when they think of property management, they think, it's just rent collection and passing on the rent. But tell me a bit more about some of the ways property managers can help investors maximise their returns on property, starting with obviously firstly getting it ready for rent before you even start renting it out. Yeah, so initially the property manager will conduct an appraisal. They'll assess the features of the property against other comparable rentals in the area to ensure that the rent is competitive and realistic. A good property manager will also consider any improvements or additions that could boost the appeal of the property to assist in maximising the rent achievable and also attracting good quality tenants. And it's also important to ensure that the property is well maintained and well presented, again, to attract the best quality tenants and minimise any vacancy periods while ensuring that you achieve maximum rent possible.
And that's really important, because the condition that you give the tenant the property in at the beginning is the way they have to give it back, isn't it?
That's right. Yeah.
And in most states and territories around the country, they do what they call is a property condition report, where you do a full detailed report of everything in the condition of the property, and I gather you take lots of photos as well, and
hundreds and hundreds of
photos, and so that's how you benchmark the tenant at the end, isn't it?
Yes, so we use the initial ingoing property condition report when the tenant vacates to conduct a final bond inspection, and the tenant is obligated to return the property in a similar condition to that which it was given to them at the commencement of the tenancy, less fair wear and tear. So that can be a bit of a contentious issue as to what fair wear and tear is, and it comes down to how long the tenant's been in the property for and what's considered to be realistic.
And you mentioned there, Turk, in terms of the rent amount, and I've seen that myself I've been an owner and I've been a tenant at varying stages in my life, and I have seen where some property managers aren't on top of not only getting the rent up right up front, but the rent reviews. So tell us how you go about that rent review process to making sure that they're up to market conditions, because I'm sure you do see when we get properties from other property managers that sometimes they're $100, $200 under market, aren't they?
Sometimes they are, yeah. It has changed a little bit recently now that we can only increase rents once every 12 months. Previously, we were able to do that 6 monthly, so we were able to include a rent increase clause within the lease agreement to happen at 6 months. Most tenants were pretty accepting of that because they understood that the market was changing, and we also had to specify the amount so they knew what was going to come. So now we'll need to wait until the lease expires in order to conduct a market rent review, and that's when we'll conduct a full comparative market analysis, discuss that with the owner before presenting an offer to the tenant.
Yeah, and that's so important because I've seen if you're $200 a week under market, that's $10,000 a year that the owner's not getting. And certainly you want to look after your tenants, but at the end of the day, the market is the market. And I'm certainly a big advocate for charging market rents. Maybe a good tenant, my philosophy in this is maybe a good tenant's $10 to $20 a week max discount, but I wouldn't be discounting $100 a week if I was a property investor, and I don't.
Certainly not, especially if you can lease it to somebody else and achieve that rent or more.
Yeah, exactly. Now, when we look at improvements on properties, and that's one thing that all property investors don't like often spending money, but sometimes you've got to do that. You've got to do, whether that's at the beginning to get it up to a good standard or during the term of that lease, things get worn out, carpets, etc. So when it comes to improvements on properties, what kind of things do you generally find you and the team recommend, and what do investors need to think about when they're making updates to their property?
Yeah, it's about making the property the most appealing that it can be. And it's also important to consider the types of properties that your investment will be competing with in the local area. So having a look at what desirable features that they may have, which would command a premium rent, such as fresh paint or carpets, having things like dishwashers, air conditioning, heating, and also think about the types of tenants that your property is suited to and what features that will appeal to them the most. So, for example, a property that has air conditioning throughout and a lot of storage space would likely appeal to families, whereas a smaller home with low maintenance gardens and additional security might appeal more to your professional working couples. Amanda,
they're really important points, because when we talk about selecting the right tenants for a property, we've got to understand, and property investors have to understand that professional couple that everyone perhaps wants as the tenants with no pets, they might be the ones who have lots of choice out there in the market because everyone wants them, and so the property has to be presented in a very good way. So it's a two-way street, and to get the right tenants, you have to attract the right tenants in the first place. So tell me how a property manager can help in that role.
Yeah, well, a property manager understands your area's unique rental trends, and they know how to position your property competitively. They can list your property on reputable platforms. They'll target serious renters and avoid time being wasted on unqualified leads. They'll use high-quality marketing tools such as professional photography, and they'll also conduct very thorough background checks to ensure that reliable tenants are selected for their property, while also adhering to legal requirements.
What are some of the common mistakes you see property owners make when choosing tenants? Because as a property manager, you're recommending, and if they're using us or another good quality property manager, hopefully they're making the right decisions. But what do you see some of the things that owners do that you think that's a mistake?
Leasing to friends or family, while landlords might think that they're doing the right thing, personal relationships can blur the boundaries, and then it can make it very hard to address any issues that arise, such as rent arrears or any damages, especially when it comes to the end of the tenancy as well. So that's where it's important to have a property manager who can step in and sort of act as that third party to negotiate. Another thing is relying on gut feelings instead of the reference checks that have been completed, and particularly going with a tenant that you feel might be suitable just because they're your preference and not so much whether they've actually got the affordability or a good rental history. Some private landlords might decide to put a verbal lease agreement in place rather than signing an actual contract, which is a big no-no. So it's very, very important to have a detailed lease that's in the prescribed format. And lastly, choosing tenants based solely on the highest rent offer, rather than actually looking at whether or not they've got the ability to be able to pay that rent, and then possibly foregoing another applicant who may have been a better choice.
I think the important part for me as a property owner, is as much as I'm not an expert in property management, all the time and energy, and it's just having that independent person in the middle there where you don't, it stays a business professional relationship, and you don't have that that personal relationship. And as you say, friends and family, that's where that personal relationship can blur those boundaries, and often that's where we find properties are significantly under rented. But Amanda, when you're checking, you mentioned checks there, and when we were just discussing that topic, what sort of checks do we do to make sure the tenants are suitable for a property and can afford the property that they're applying for?
So in addition to doing the normal reference checks of employment and previous rental history, property managers also have access to national tenancy databases, and those databases contain the details of tenants that have previously defaulted and are currently owing money. So through those databases, the property managers also have the ability to verify the applicant's identity. And if they don't have a rental history, they can actually also see whether they've previously been declared bankrupt or if they've got any court records against them. So it's very handy in those situations where perhaps somebody doesn't have a rental history because they've relocated or they've sold a property. And also in cases where a property has been sold, quite often we can get a reference from either the selling agent or perhaps if they're going to rent it out through their new managing agent.
Yeah, and I'm seeing around the world these trends that when I'm reading articles about, they're trying to stop people doing background checks on people. Well, if you want to get a property, and not everyone's perfect, and we know that, but the more that regulators try and stop people getting this information, it's going to, I think personally, it's going to mean people revert back to inherent biases in choosing tenants, and some people may not get a go even if they're good quality tenants because they just don't have enough information on them. So you mentioned the getting the right tenants for your property. That's obviously very critical, but maintaining the tenants there for the longer term is so important, because I know as a property owner, when the property becomes vacant, even in a hot market, we're still going to be in a situation where you've got 3 to 5 days vacancy. You've got to get a final bond inspection, pay letting fees to release it, all those sorts of things. So to me, a good tenant, and I said earlier, is worth retaining very much. Maybe a slight discount on the rent to market rather than going back to market, but certainly not $100 a week. But what can property managers do and owners do to balance this out? You want to get good tenants, you want to keep them, while also ensuring that the property is getting fair value for the rents.
One of the most important things would be to ensure that the property is being well maintained. So it's great that if you've got a good, reliable tenant, they can actually reduce your ongoing maintenance and repair costs because they're maintaining the property. And because they're being reliable with paying their rent, you've then got those funds that might be available to make improvements to the property. So ensuring that the property is kept in good repair, maybe addressing some of the tenant request items. They might ask for additional air conditioning or perhaps some additional security. So those sorts of things also add value to the property. So it's worth doing those sorts of things for your tenants to keep them happy. Also, it's important to provide regular communication and prompt responses, because that goes a long way in establishing and maintaining good relationships. So then it's a two-way street. So if you want them to do the right thing, you also have to do the right thing by them. And if you keep the lines of communication open, then if a conflict does arise, then it's a lot easier then to negotiate a desirable outcome for both parties.
And I think from a property owner's point of view, if the lease is coming up and in 2-3 months, and that's what I'm sure you do in your team, well out before the lease expires, you're talking to that. So that's where the things such as adding air conditioning units to a particular area or so forth can help not only just keep the tenant, but also potentially get you more rent.
Yeah, that's right.
Can't it? Yeah, and look, again, in the markets where it's strong, you think, oh well, that's right, they go. I'll get another tenant in quickly, but certainly the market will go in cycles, and we certainly, Amanda, we've seen some cycles, and remember that period there where the vacancy rates were a lot higher. Sometimes it can take 6-7 weeks to get another tenant, can't it?
Yeah, and that means a huge amount of lost rent if you're not able to keep the property tenanted. And also, it's a risk if you're going to try and chase that carrot by getting the most rent possible, at the risk of then losing a quality tenant, because then you could have that vacancy rate. And then, as you mentioned earlier, you've got those fees involved, like letting fees, advertising, the final bond inspection, and it quickly adds up. So that can often outweigh any rent increase that you might end up getting, in addition to the vacancy period.
And one of the things that you mentioned earlier on, some property owners who self-manage particularly tend to just do verbal agreements, which is crazy in my view, or particularly now I think legally you're meant to actually have written documents, but that depends which state and territory you're in. But just going back to that lease agreement, a lot of states and territories have some level of prescribed documents now. That's what we're seeing, and that's becoming more common. But there are some additional steps a property investor can take beyond the industry standard, can't they? And things they can put in their lease to protect them.
So yes, there is a prescribed lease agreement that must be used in WA, but you can add additional clauses to maximise protection of your property as long as they don't contravene the Act. For example, using felt pads under furnishings to protect flooring, forbidding the parking of vehicles or trailers on lawns or other grassed areas, or forbidding the use of over-door hooks, which can cause paint damage if they're used to the doors and the frames. So those sorts of things are reasonable to add as an additional clause in your lease agreement. You just can't have anything that contravenes the Act. It's also important to have a look at the length of your lease as well. Because if the property is set to fall vacant over low demand periods like Christmas, you want to try and avoid that where possible. So sometimes where you might have a 12-month lease, you might wish to extend it and make it a 13 or 14-month lease just to get it over that Christmas period.
Yeah, no one wants to go vacant, and I've got some properties that are in an area that there's a lot of students. I certainly don't want to be going vacant in the middle of November to early December because I know I'll struggle to get someone back in until January, February. So that's an important thing. Again, the property manager, most of them unfortunately don't think beyond the standard 12 months, but that's an important thing and I'm glad you guys do that because you want to get it to at least mid-January. Obviously, it's still got to be negotiated with the tenant, but you want to get it to a point where it's not sitting vacant, and as you say, that all that loss of potential rental income. Now, ongoing maintenance. This is always it's never fun as a property investor. Getting that email or that phone call from my property manager saying, "Damian, we've got to do something," but it's part of life, and investors have to set aside a budget each year for maintenance, and some years you won't spend it all, and some years you will, and you'll spend a bit more. But hopefully that'll balance out. But I think one of the things that you've seen, Amanda, and I have is that if you let things go too long, you don't just have to maintain it; you end up having to replace it and start again. So how important is it to be proactive, not just as you mentioned earlier on from a tenancy point of view, getting on top of it, but also from an ongoing asset management point of view? How do you keep on top of this, and what should owners be thinking about when looking at maintenance and repairs?
Yeah, it's extremely important to be proactive to help prevent cost blowouts. Something simple can quickly turn into a big expense. Say, for example, if you had a minor leak via porous grout or something and you just start to see that water damage backing the shower, if you leave that for too long, you're going to end up with a massive repair bill. You'll have to retile the whole shower in some cases and then repair the backing wall as well. Also, it can cause damage to your cabinets if they're next to the shower as well. So the property should be inspected regularly to identify items requiring attention, but there is a responsibility on the tenant as well to report anything that they may notice during the tenancy. So if they notice any leaks or anything causing damage, they are required by the RTA to report that, and if they fail to do so, they can actually be held somewhat liable for any further damage. Other items that owners can do to help prevent cost blowouts would be conducting annual maintenance like gutter cleaning, carrying out regular pest inspections, and also your electrical compliance checks.
Well, even gutter, again, I get the communication from my team and doing the gutters. Do I really need to do that? But if I don't, and the gutters overflow and it goes back in the eaves or back in the house, it's just going to cost you 20, 30 times more than the annual gutter cleaning. So it's just an important point of as a property investor, every year you're going to spend money. You don't, whether we like it or not, that's just reality. It's a real piece of bricks and concrete and tiles and everything else that goes into a property. It's going to need maintenance. So I think just the message there for every investor is, and this is a conversation I know our team have and you have, is just they've just got to put aside some money each year. Hopefully you don't spend it, but that's just the reality of having a property, isn't it?
Yes, it is. And we also make recommendations for long-term maintenance. So it's worth considering keeping some money aside each year for things like replacing carpets and repainting the home throughout, because even if a tenant looks after the home really well, it will suffer wear and tear. So it's important to be prepared for addressing those items in between tenancies.
So, Amanda, most people use property managers, but I certainly have never self-managed because I can see the benefit of having someone in the middle there. And this is even before we had Momentum Wealth. I always saw the benefit of having someone there managing that investment professionally. But of course, a lot of people go, well, how do I choose? Who's the best property manager? They're cheapest fees, but maybe we can talk about that. But how should owners do due diligence on prospective property managers? What sort of questions should they be asking?
So they could start with asking the property manager how many properties that they manage and whether it's actually end-to-end. So end-to-end means that the property manager's doing everything themselves, right, from the ingoing inspection, routine inspections, rent collection, everything. Or do they get support for things like leasing, routine inspections, or their final bond inspections? Also, how are they going to ensure that tenants pay their rent on time? What methods do they use to collect the rent? And then what is their process for rent arrears if that happens? And what will they do to protect and maximise your property's value? Is probably one of the most important questions to ask.
Yeah, it's about, and unfortunately in the property management industry around the country, too many agencies, in my opinion, have simply gone, well, I'll just give the property manager more properties to manage and, I'll make a better return. I'll discount my fees but give the property managers more properties, and we all know that what happens there. There's only so many hours in the week, and the service levels decline. And a lot of property managers, unfortunately, don't get the time to do that value adding or recommendations because they simply don't have the time. So the message there to any prospective, any property investors or prospective property investors: do your due diligence and don't just shop on fees. We've spoken on this topic today, that some property managers got properties at $100 to $200 a week under market simply because they're too busy to do proper rent reviews. Well, you might get slightly cheaper fees, but you're probably shooting yourself in the foot, thousands and thousands of dollars a year. So just so critical to be choosing. Yep, fees got to come into the equation, always does. But what are you getting? It's about not so much how much you're paying, what value we're getting for that money. And my experience has been that a good quality property manager is well worth the money. It takes me away from the headache of having to deal with it. But not only that, I know that my rents are at market value and my properties are getting well looked after. So I think that's really important due diligence, Amanda, that people should be doing. And now, just before we wrap up, I want to talk about dual income strategies, about getting more money from your properties when the market gets strong around the country, and in some capital cities and states it's easier to do than others. They want to look at doing dual income strategies. So what are some of the things that investors need to consider before going down that path?
It's important to first consider what regulations the local council might have. Also consider utility splits as well, because even though you can have an electricity sub-meter installed on your granny flat, Synergy won't always go out and read that meter. So it's up to the tenant or somebody to go out and read it and then calculate the usage accordingly. Alternatively, you can do like your 80-20% splits, but then that can result in some conflict between the tenants as to who's actually used what. And then also looking at access, which areas are going to be shared, who's going to be responsible for the maintenance. Then you've also got the availability of internet and telephone lines. That has been a bit of an issue with some tenants where they've not actually been able to get internet connection to the granny flat. And then also shared parking. So who's going to have maybe the use of the carport, the driveway, adding in another letterbox, also your rubbish bins, because the council don't always want to provide another rubbish bin either. So that's another cost that you have to spend as well when setting up your granny flat.
Look, there's a lot to think about there, and I look at in certain markets and certain times it can be a strategy that might make sense, but there's a lot to. It's actually quite expensive. If you do it properly, and you've got to put on an additional property out the back. It's not just that cost; it's all those other things you've got to do. Think about the internet, the electricity bills, and I've certainly found from experience where you have the owner pays the electricity. People like to run their air conditioning 24/7 because they're not paying for it. So all those sort of things come into play. But look, might make sense. Talk to your property advisors and your property management team about what sort of rents and how things might work, but just be aware that it can be reasonably expensive to add on those dual income properties depending where you are around the country. But Amanda, thanks so much for joining us. I really appreciate your expertise. I know you've been in, you don't look it, but you've been in property management for a long time, and you've given our listeners some great takeaways and some great advice and on the importance of effective property management. But any particular advice you would have for our listeners today on managing a property?
Do your research to engage a professional property manager. Look beyond the fees, consider how they're going to protect and add value to an investment long term.
Thanks again, Amanda. My parting bit of advice to investors in this episode is pretty simple, and that's to invest in proactive property management. A good property manager is going to add far more value than the fees that they're charging. And not only that, the fees are tax deductible, so it means the real cost out of pocket is even less. But if you manage your property well, and that's by that whole process we've spoken about today, getting the property ready for rent, so making sure that the property is presented in good condition so that when the tenant leaves, they've got to hand it back in that same condition, subject to fair wear and tear, choosing the right tenants, doing all those checks on the properties, getting the lease structure in place correctly and with all the protections in there, and then that proactive property management on maintenance and repairs. Yes, we don't want to spend money, but doing all those little things that keep the property in good condition, and of course then making sure a market rents are there, and particularly in rising markets, as I said earlier, we've seen lots of properties go way under. But it's so important. It's buying the property is exciting. Sometimes it can be a bit challenging when you're renting it out and you've got expenses coming in, but you've just got to stay the course. If you get good quality property management and you've chosen the right asset, you're certainly going to make a lot of money over time. Thanks for tuning in. If you're enjoying the podcast, please take a moment to rate us to help others discover the show. Please note the information shared on Property Investing Roadmap is general in nature and doesn't take into account your individual circumstances. The information is for educational purposes only and should not be relied upon for investment or financial decisions. Always seek professional advice before deciding whether to invest. Today's guests are representatives of Momentum Wealth Property Proprietary Limited, trading as Momentum Wealth Residential Property, licensed real estate and business agent in WA RA 53788.